We're going live to the CBOE. Kevin Hincks is standing by, and he has our pre-bell playbook. Good morning to you, Kevin Hincks.
Good morning, Nicole. The government is shut down, but Schwab Network remains open, Nicole. And today we got economic data from two places. I don't know how much more we'll get this week, but we got mortgage applications this morning. 30-year mortgage rose from 6.34% to 6.46%. Therefore, the couple weeks strength we've had in mortgages is now lower. The composite down 12.7%, down 1% in purchases, down 20.6% in refinances. So higher rates affecting mortgage applications. Then we got the ADP employment report, and it was a very volatile report. The first number down 32,000 jobs. Last month's number revised from up 54,000 to down 3,000. Here's why. The ADP conducted its annual preliminary re-benchmarking of the National Employment Report in September based on the full year 2024 results of the quarterly census of employment and wages. So the recalibration resulted in a reduction of 43,000 jobs in September compared to the pre-benchmark data. So adjustments made there, but still the bigger picture showing weakness in the labor market. We know that jobless claims have been relatively strong. So what are you seeing? Lack of hires, lack of fires is what's going on in the labor market right now, but clearly there's been some weakness. And if you break down the ADP data, every size company lost employees except for companies 500 employees and more gained 33,000 jobs. Every other metric was lower on this report. So we got mortgage applications data that showed a drop based on higher rates. We got an ADP employment report that showed pretty widespread weakness in the overall hiring of new employees, Nicole. So there you have it. The markets are slightly lower. They're off their pre-market lows, but remember something. Here's the number one thing to understand in terms of a government shutdown. Unless you work for the government or you make money off of the government, you'll see very little change in your day-to-day life, Nicole.
Yeah, that's the big picture. I mean, it could affect the numbers or jobs going forward if people are furloughed or some of those jobs, don't remain afterwards. In the meantime, I tend to agree with you, particularly when I was talking to Sam Stovall and he looked back to the 70s and there were 20 government shutdowns and they averaged 8 days each. And for most of those, the market went nowhere. And for the times that it did go up afterwards, particularly after the 70s, that was sort of the tumultuous time. After the 80s and beyond, when the market was moving higher, it moved up 1.4%, 70% of the time. So it was not terrible for the markets. The ADP print doesn't always signify what the BLS print will be. Your thoughts on the disparity or what today's print at least has a takeaway?
Yeah, remember, when you look at the ADP, they are a payroll service, and these are private jobs only. Now, you can also make the case that the data the last few months have shown negative government hiring. So that number may not improve if we were to get the BLS number coming up. So all things considered, this is showing the re-benchmarking. Remember, the overall labor market is not getting stronger. If you look at the price action so far this morning, you've got the lower dollar, you got lower yields, which means bonds are rallying, and you've got lower crude oil prices. So the overall economy in September, strong. The stock market's strong. It's the labor market that has seemed to have stalled. They're not firing. Jobless claims, 218,000 a week ago. Pretty solidly low numbers, but they're also not hiring, Nicole.
Yeah, understood. All right. Good to see you, Kevin Hincks, on this Wednesday morning. Appreciate it. Thank you, Kevin Hincks.